Good evening from Cape Town and welcome to the Market Report with me, Lindsay Williams. In the next half hour we look back at the JSE and local market trading day that just concluded and also keep you in touch with what's happening overseas. It's been a bumper day both here and overseas. The JSE today up 2.1%, the all-share that is, and volume was a chunky 17.19 billion. What's it all about? We'll find out in a moment. We're going to look at the markets in greater detail. Here they come. And let's start locally and start with our all-share index. As I said, 2.1% higher. Yesterday it was down 1%, and that was in the last hour of trading. The technicians were saying it's going to be a bad day today, but not a bit of it. 49,433, 2% to the good. On the sectors, well, the banks were the best performers, I think, up over 3%. Industrials weighed in with a good one as well. There's the banks, 3.2% higher. Financials, 2 2/3. Industrial shares were 2.25% to the good, and even resources did well, up 1 2/3%, reversing yesterday's losses. On the commodities markets, well, gold price not really justifying the big move in the gold shares we saw yesterday, but nonetheless up a couple to 12.35. The platinum price is 12.43, up 4.5. Brent crude oil off its lows, but still horrible, $45.87 per barrel, down $1.56. That's Brent crude in London. And the copper price up 0.5%. Dollar rand 11.50. It's done nothing for a couple of days, and long may that continue. The euro rand 13.55, British pound against the rand 17.45, and the euro dollar 117.80. On the international markets, because of Apple and because of Alcoa, the US markets are doing incredibly well, more than doubling yesterday's losses. We've got the S&P, if we can get it up on the screen. There it is, S&P. Let's start with that one, up 1.25%, 2054. The Dow Jones 17,884, which is 1.4% higher, and the FTSE up 0.6%. Right, now let's have a look at those markets in greater detail with my guest in the studio, the Market Report studio in Cape Town, and that's Avien Pillay from Old Mutual Wealth Private Client Securities. Great day on the market and good volume as well for this time of year, 17.2 billion. Did it start with the Chinese trade data, do you think?
I'm not sure. I mean, I was actually thinking about that, and I think today may be the second day when a lot of participants got back to the markets. So, yeah, it's quite surprising. I suppose some stocks got oversold in the last week or two, so I think they're just bouncing off, but still concerned about the commodities.
Yeah, indeed. We also had a good set of numbers coming out of Alcoa, which is the traditional share that starts the US earnings season, and that share price overnight was up 1.9%. I think it's gone even further today, or in the last hour or so, with the New York market profits proper. So we had that. Then we had Apple being upgraded, and that came out of the blocks 2.5% high. It was upgraded by Credit Suisse, I think it was, but anyway, one of the big investment banks. So very much a lead from the overseas markets, and that's, I think, augurs well for the first quarter.
It is, yeah. I mean, just a couple of days ago we had some concerning reports about the US and the impact on the downgrades on the oil sector and the impact on the S&P earnings. So it is a positive surprise to see that some of these other companies are making up for those downgrades.
We're going to talk about that oil price later with your headline of the day, but of course people think that it's just a positive effect on the economy that the oil price comes down. But on the other hand, some of those big energy giants have been part of this big rally that is almost 6 years old now.
Yes, and I think what the market doesn't quite understand is that the oil sector in America has been a big employer. So on the one hand, the consumers benefit from lower energy prices, but on the other hand, at these lower oil prices, the oil sector is bound to shed jobs. So that's also going to impact the economy. So it's not only positive news.
The other thing we had today was the first of the trading updates. At around about this time of year, all the retail analysts start to look nervously at their screens and see who's going to come out with either good or bad numbers. The first numbers came out today from Truworths. That was their numbers that included most of the peak spending season, and like-for-like sales were down. Now the share price was up 2% when those numbers came out. It closed down around about 2%. I wonder if that sets the tone for the rest of the apparel retailers and also maybe the food retailers as well.
I don't think so. If you look at Truworths' performance over the last year, it has underperformed the others. So Truworths is operating in a certain segment of the market where there's a lot of competition, and Truth has been losing some market share, so I don't think it sets the tone for the others. We could still get some good numbers out of the other companies.
We'll know in the next 2 weeks what their trading updates are like. Let's have a look now at the performance within the performance. JSE up 2% today. There were some gainers and losers in the individual sectors and stocks. Here they come. Okay, the top 5 gainers on the JSE Securities Exchange today were as follows. Top of the list, Anglo American Platinum up 5.75%, Anglo Gold Ashanti up 4.5%, Mr Price 4.5% to the good. Don't know why that was when the Truworths numbers were bad. Maybe they're saying it's the cash retailers that will do well, not a credit retailer. Remgro up 4.5%, and Nedbank also up 4.5%. Top there, Anglo Plat and Anglo Gold. The gold shares have had a great time recently. We covered it last night on the show with a 7.4% gain yesterday. At one stage today, they were up another 5%. They ended up 1.33%, something like that. But gold and platinum themselves haven't been succumbing to the commodity price weakness as some of the other metals like, for example, iron ore have. Is this a cause for optimism?
No, I think it's basically the safe haven status that's playing a role in that. So when the global markets do get quite jittery, and we've seen that the markets have been quite volatile over the first 2 weeks, that investors turn to gold, and I think that's what it's all about. Platinum has been weak for a large part of last year, and I'm not sure whether it's just bouncing back.
Maybe a base effect, but also quite impressive that they both held their own and even gained, despite the fact that there's been a strong dollar, because of course the precious metals relationship is weak dollar, stronger metal price, and vice versa. Let's have a look at some of the losers now. And this is unusual because all the losers were actually gainers, but it's all a relative game here. Here are the losers on the JSE. The losers at the top, Sasol, which was up 0.6%. Growth Point was up 0.8%. Tiger Brands was 0.5% higher. It's coming on your screen now. RMI, that was 0.9% to the good, and Richemont 1.3% higher. And as I said, although they're the bottom 5, they're the bottom 5 performers, not the bottom 5 that went down, because none in the top 40 did go down. Just look at the bottom of that list there, Avien. Richemont, they've got a trading update coming out on Thursday, I think. Lots of currency movements since they last reported. Lots of diverging performances from the luxury goods markets in which they ply their trade. Do you like this one?
We do own it. I mean, the recent or the trading updates of the last year or so have been a bit mixed. So on the one hand, Richemont is benefiting from a weaker euro, because that's largely their manufacturing base. But they also have large operations in the emerging markets, and data in the emerging markets has been concerning. So it's a bit of a mixed bag with Richemont.
It might be also something interesting to watch, because the oil price coming down means that certain countries that are oil producers that have a propensity to buy luxury goods might have their wings clipped a little bit. I certainly wouldn't be, I mean, this has got nothing to do with the Richemont, but you'll see the point. I certainly wouldn't be long of any Andy Warhol paintings that were sold at Sotheby's in the last couple of weeks. Extraordinary prices. Seriously, it might have an effect.
I think, I mean, if you looked at Richemont's sales breakdown, the Russian sales have been quite weak in the last 6 months or so. And I suppose it's a function of the markets and the wealth levels in Russia. Yeah,
the Russians like a little bit of bling, but on the other hand, the moment that the Russian story started to unfold, a lot of Russians actually started buying more in order to get money overseas. They started diversifying their portfolios by buying even more properties in London.
Yeah, what happens is when the Russian ruble weakens, that Russians try and buy hard assets, because they find that the ruble weakens, and then these prices shoot up. So the retailers actually have been doing very well in Russia. They've been selling lots of TVs and lots of watches. So the immediate effect is that Russians rush out and can buy as many imported assets as they can.
Yeah, I don't think the oligarchs really care too much about this and that if you're worth 20 billion. Anyway, let's see what caught Avien Pillay's eye today. It's time now for Headline Grabber. Last night's guest was David Shapiro from Sasfin, and America's going to lose. The oil price war is your headline. He also had a headline with oil, concerning oil, and with the price down below 46. I'm sure there's a few more guests in the next month or so that will do the same thing. What's your take on this one, though? You're talking about a war between America and the rest of the world, I think.
Yeah, I'm surprised that the market is actually taking such a short-term view of oil, because if you look at it, the global demand is about 93 million barrels per day. And the shale increase has been about 2 to 3 million barrels, and we've also had an increase in production from a few other countries, Russia, Iraq, and some of the smaller producers. So oil production or oil supply has increased by about 3 to 4%, and the price has more than halved over the last 6 months. Now, if you think about it, you only need 1 or 2 small countries to actually stop producing to wipe out that gain. So, you know, the outlook could change materially in the next 2 to 3 months. So I'm surprised that the market is taking such a short-term view. The other thing is that, you know, the shale industry has increased production significantly over the last 2 to 3 years, but mainly in the last year or so. And the shale industry is basically indebted to the tune of about $200 billion, and that needs to be financed. And you know, we really don't know what is the break-even price for shale, because it's quite a fragmented industry. But we are told that it's somewhere in the region of about $60. So there are a lot of producers that are feeling the pain. It was actually about a week ago, about 6 days ago, a small Texan shale producer went under or filed for bankruptcy. The market didn't take much notice because it's quite a small player. It's a privately held company. But I think when one of the bigger companies start to get into trouble, then the market's going to take notice. So, you know, it doesn't take a lot for that excess supply to be wiped out. So I'm surprised that the price is reacting the way it has.
Do you think that on the counter-argument to that might be that when it was $115 a barrel just 6 months ago, that was overdone to the upside? In other words, it was all to do with, well, a lot of that last $5–10 was to do with the crisis in Ukraine and the potential disruption of the gas supplies, and therefore the whole energy complex going up. As soon as that became apparent that there was some sort of deal between the Russians and the Ukrainians, and plus all the shale gas noise, that the price came down. So it went too far to the upside, maybe too far to the downside now at $46 a barrel, and maybe at $75, $80. We'll get an equilibrium in 2015.
Yeah, I think so. I mean, we found that oil has always overreacted. If you look back in '98 when it dropped to $10, when it hit $140 in 2008, when it dropped to $34 in 2009, it's always overreacted. And I suppose this is just another overreaction.
Same question as we ask everybody. The pure play that you've got on the JSE Securities Exchange is Sasol, was 642. It's currently, what was it? Okay, sheet here. It says 384, which is up 0.6%. 384 from 642. Oil price 115 down to 46. Are the two correlated, or are they out of whack, do you think?
It's a bit out of whack if you look at its long-term average. So if you plot a graph of Sasol against the Rand oil price, Sasol is discounting a Rand oil price of about over $700. It's currently trading around, I think it's $550 to $600. So yeah, so Sasol is basically discounting a higher oil price. But if you look at a number of other global oil companies, Exxon, they're all discounting higher prices.
Maybe they've got a hedge in place. I mean, I know Sasol has hedged in the past, and very briefly, maybe they've got a hedge in place which protects them from a certain amount of this very chunky fall. I'm not sure if how effective, I'm not sure to what extent they are hedged, but I think the number is that for every $1 drop in the oil price, the revenue drops about by 700 million. And also there's a very big correlation between the Rand-dollar exchange rate as well. But hold those thoughts. We're going to take a break now, and after the break, the market report will continue with the international markets.
Who's speaking in the back?
Welcome back to the market report. I'm Lindsay Williams. Let's have a look at the international markets, because they've been boosted by all sorts of things. Chinese trade data and good results from the United States. The DAX in Frankfurt 1.8% up, the FTSE up 0.6%, Dow Jones currently 1.4% to the good, and the S&P 500 currently 1.25% higher, and the US market's also boosted by Apple, currently up 2.5%. What is happening in the emerging markets? Okay, Russia, goodness me, not again. It's all linked to oil, of course, down 2.5%. Istanbul flat. The Bovespa in Brazil 0.9% higher, and Mexico also 0.9% higher. What about the Far East this morning? The Far East looked like this. Not particularly interested in the Chinese numbers, down 0.2% for the Nikkei 225, that's a currency thing. The Hang Seng not doing too badly, up 0.8%. Shanghai Composite, after a bit of a mauling yesterday, 0.2% higher. And in Australia, the all share in Sydney down 0.33%. So it's the European markets, Avien, that have really taken up the challenge, and now the American markets have caught that baton and are going on. And it's America that I suppose is many people's choices for a market this year, just like it was last year. It's got good growth, it's creating jobs, it's got no inflation. Bob's your uncle. American markets, what do you think?
Well, yeah, I mean, if you look at the European markets, the concern about Greece and the euro seems to have subsided for the time being, but it's going to be back on everybody's screen shortly, because the Greek elections is on the 25th, and I believe that the party that wants to write off a large chunk of Greece's debt is still in the lead. So
Syriza, and I don't think that Germany's going to be particularly impressed, and I do think if Syriza does get in, which is the populist party, it does get in with enough majority to be serious and form a government, then I don't think that the German finance minister and Angela Merkel will be particularly friendly with some of the proposals.
Well, what actually boosted the market last week was when Angela Merkel came out and said that they will negotiate with the incoming party. So I think that kind of gave the market an indication that maybe Germany is backing down. So that did give the market a boost last week.
How about China, before we go on to the next piece? Because China yesterday got hit by around about 2.5%, the Shanghai Composite. If you think that's a representation of what's going on in the Chinese economy, fine, but it's the best that we can do. Today it was up 0.2%. The trade data today was good, but it's mostly exports, an increase in exports rather than the imports, exporting deflation to us.
Yeah, I mean, the thing is, for Chinese growth to improve from this levels, we actually need the local economy to make up for the slowing global economy, and we haven't seen any data that supports that view. So still concerning that the local consumption is not growing as much as they would like it to grow at.
International markets showing that the US is still the market of choice, certainly in the short term. That's it for international markets. Let's go now rather to the long and the short of it. This is the part of the show where our guest has to pick something that he or she thinks is going to go up and one that he or she thinks is going to go down. I want to make a very clear point here that the Old Mutual Wealth private client securities doesn't go short of things, but what I've asked Avien to do is sort of give us an idea of something that he wouldn't buy at the moment. So we'll start with the so-called short side of things. Telkom, why don't you like it?
Telkom has benefited largely from cost cutting, and management have not presented a credible plan of how they're going to grow the business. The fixed line business has been declining for some time. The mobile operation continues to make losses, and we don't know how management is going to grow the business once the cost cutting has come to an end.
So this was a case of something that was 12-13 rand a share and went shooting up to something ridiculous. It was in the 60s at one point. I noticed recently because
no, it's actually bounced back. So it sold off for a while and bounced back.
Yeah. So it was, from what you're saying, there was not much evidence of top line growth. It was cost cutting that did it.
It was cost cutting.
Anything else in the sector that you would like? I know this is not part of the conversation we should be having, but telecommunications exposure, MTN or Vodacom?
Yes, we like Vodacom. We like MTN. It's possibly the cheapest exposure to African growth. Right now, it has been sold off largely because of the big Nigerian exposure. I think roughly about 40% of earnings is derived from Nigeria. So so it is concerning, but it's still an excellent play on Africa, and it's probably the cheapest exposure to Africa.
So you like that. What do you like, though? What would be your long of the day? Again, you're not you're a wealth manager rather than a stock picker per se, but Discovery caught your eye.
Yes, I mean, Discovery has been the perfect disruptor in South Africa. If you think back, what was it, 15 to 20 years ago, when Discovery was one of many medical insurance companies in South Africa. And if you think back today, Discovery is the monopoly in South Africa. They have the largest market share. So they've been the perfect disruptor in South Africa through the Vitality model, and they're now expanding that model offshore. So they basically have operations in the UK. They recently acquired the balance of the Pru Health JV.
Yes.
They're basically expanding the Vitality model into Asia. They're selling the Vitality model into the US. Now, we don't believe that global other major insurance companies would have teamed up with Discovery if they didn't think that the Vitality model was a worthwhile model. So it's been the perfect disruptor in South Africa, and it's now expanding that model, and it's basically disrupting the UK market.
And if they get Ping An right in Southeast Asia, notably China, then of course the sky's the limit.
Pretty much.
Yeah, and the United States, because they've had some problems in the States before, and now they're going back in there. Again, it's still the biggest economy in the world, albeit with incredible competition.
Yeah, I think the United States, it was probably a function of a number of things, and they went in there quite early. The risk was also quite high. They basically tried to go in alone. And they now are using other companies to actually roll out the Vitality model. So they're basically selling the model to a number of other companies in the US.
Yeah. It's impressive, isn't it, that something that they conceived in South Africa, they can now bolt on to other geographies.
Yeah, and it's clearly a model that you can't easily replicate, or the other insurance companies would have tried to develop this model on their own.
Yes, rather do it with somebody else. Okay. Let's have a look at my chart of the day now. And my rationale for my chart of the day being the oil price. I know it's boring because we speak about it a lot, but I saw an article today on one of the US websites which said, is copper the new oil? Oil is coming down precipitously. The copper price has been as well, but not as much. Let's have a look at both pictures. My chart of the day. Okay, Joe Berg, I'm at your mercy. What are we going to start with? The oil price, short-term or long-term? We're starting with the copper price, the director says in my ear. Here's an article from Reuters. It says a slump in copper prices to their lowest level in 5 years has pushed as much as a tenth of the world's miners into the red. It's a similar story. This is what the great thing about the commodity cycle is. Even someone like me can understand it. The price goes down, production gets cut off, and then the price goes up again. There's copper down 0.5% over 1 year, not looking particularly good. And I don't know, what do you think about this one?
I think like a number of other commodities, demand is starting to wane, and China has been a big consumer for quite a number of years, and they are slowing their consumption, and there's nobody else to actually take off where they're actually dropping.
Of the South African companies that have exposure to copper, which has the most exposure to copper in their commodity portfolio and therefore might be vulnerable should this red metal keep on going down?
I think they all have a little bit of exposure. It's not too big. If I think about Anglos, it's got some exposure. I think Anglos may be the largest. I'm not 100% sure.
Yeah, all right. And what about the crude oil price compared to that? They look very similar, don't they? Year to date down, what is that? An enormous amount. But anyway, 45.71. Yeah. And if the oil price goes down, then it tends to follow that all the commodity complex goes down. At the moment, we've got the exception of gold and platinum. We've spoken about that, and we've spoken about oil. Given the nature of the way that commodity markets work, even though you think that the market may be a little bit overdone and maybe an overreaction, Goldman Sachs says $30 to $40 per barrel. Do you think there's any chance of that occurring?
Personally, no. I mean, I think before that happens, we'll probably have an announcement of a few more bankruptcies. We've already had one in the US. It's a small one. I think that as soon as some of the shale producers start to file for bankruptcy, the banks will all get very nervous, and we'll find that the price will react. So I don't think we'd get down to $30 to $40, but we'll see.
Perhaps the good numbers from Alcoa, or the relatively good numbers from Alcoa in the United States, is a fillip for the world's resources industry. And maybe that's one of the reasons why we saw the resources index on the JSE today up 1 2/3%. Maybe because of that performance, everyone says, well, if they can do it, so can we.
Yeah, well,
I hope so, because it's been a torrid time. Avien, thanks very much for your time this evening. Avien Pillay is from Old Mutual Wealth Private Client Securities. That's it for the market report. The show will be back same time tomorrow night at 6 o'clock. Please stay with CNBC Africa, though, because coming up in a moment is Doing Business in Botswana, followed by Africa Business News, and I'll see you at the top of the hour with Nazipo for Business Tonight. See you then.